Hello and welcome to Learning Outcome 1. How does financial information influence business decisions? In this video, we explore the critical role of financial analysis in assessing business risks. Discover how different organizational structures impact financial reporting. Financial information is crucial for understanding a company's health. It helps in assessing risks and making informed decisions. Different types of organizations have unique financial reporting needs. This includes sole traders, partnerships, and public companies. Each structure has implications for financial analysis. Businesses can be structured in various forms. These include sole traders, partnerships, and limited companies. Each type has its own financial reporting requirements. Understanding these differences is key to accurate financial analysis. Public sector and international businesses add complexity to this landscape. Financial statements provide a snapshot of a company's financial health. Key statements include the income statement and balance sheet. The cash flow statement and equity statement are also essential. These documents help users make informed economic decisions. The IASB framework guides their preparation and presentation. The financial position of a company is detailed in the balance sheet. It shows assets, liabilities, and equity at a specific time. This helps in assessing the company's stability and liquidity. Comparing these figures over time is crucial. It provides insights into financial trends and business health. Financial statements alone may not tell the full story. Analyzing them involves comparing past performance and forecasts. Users look at sales, expenses, and cash flows. Ratio analysis supports this by simplifying data interactions. However, raw data remains vital for comprehensive analysis. Different stakeholders use financial statements for various purposes. Shareholders and investors focus on returns and stability. Suppliers and lenders assess debt security. Management evaluates profit trends as a success measure. Other users include financial institutions and advisors. Ratios simplify the complex interactions in financial data. They link changes in sales, costs, and inventory levels. This allows for concise performance evaluation. However, ratios are just one tool among many. They should be used alongside raw data for accurate analysis. Comparative analysis involves looking at financial data over time. It helps identify trends and business performance. Comparing with competitors offers additional insights. This process is crucial for making informed decisions. It aids in understanding the market position and potential risks. Financial reporting is guided by standards like IFRS. These standards ensure consistency and transparency. They are crucial for international business operations. Compliance with these standards builds trust with stakeholders. It also facilitates accurate financial analysis across borders. Financial analysis faces several challenges. These include data accuracy and availability. Changes in market conditions also impact analysis. Analysts must adapt to evolving financial environments. Continuous learning is essential for effective financial decision-making. Technology plays a vital role in modern financial analysis. It aids in data collection and processing. Advanced software provides deeper insights. Automation reduces human error in analysis. This enhances decision-making efficiency and accuracy. Ethics are crucial in financial decision-making. Transparency and honesty build stakeholder trust. Ethical standards guide financial reporting and analysis. Violations can lead to severe consequences. Upholding ethics ensures long-term business success. Consider a company with declining profits. Financial analysis reveals rising costs and stagnant sales. Management uses this data to strategize improvements. They implement cost-cutting measures and boost marketing. The result is a turnaround in financial performance. Globalization affects financial decision-making. Companies face diverse international challenges. Currency fluctuations impact financial statements. Global competition requires efficient financial strategies. Understanding these impacts is vital for global business success. Financial analysis is evolving with new trends. Big data and analytics are transforming decision-making. Sustainability is becoming a financial focus. Companies must adapt to these changes. Staying ahead requires continuous innovation and learning. Assess your current understanding of financial concepts. Rate your knowledge on a scale from 1 to 10. Identify areas needing improvement and focus learning. Continuous self-assessment aids in professional growth. It ensures you stay updated with financial trends. Numerous resources are available for financial learning. Online courses and webinars offer flexible options. Books and journals provide in-depth knowledge. Engaging with professional communities fosters networking. Continuous education is key to mastering financial analysis. Practical application of financial knowledge is essential. Use skills in real-world scenarios for effective learning. Engage in financial analysis projects and case studies. This enhances understanding and decision-making abilities. Practical experience complements theoretical learning. The financial landscape is constantly changing. Continuous learning is crucial for staying relevant. Adapt to new technologies and methodologies. Engage in lifelong learning to enhance expertise. This ensures success in financial decision-making. Financial information plays a vital role in business risk assessment and decision-making by providing accurate data on an organization's performance and financial position. Financial statements such as income statements, balance sheets, and cash flow statements help managers evaluate profitability, liquidity, and solvency. Financial analysis techniques, including ratio analysis, trend analysis, and forecasting, allow businesses to identify potential risks and opportunities. By assessing financial data, managers can make informed decisions regarding investment, budgeting, cost control, and resource allocation. Therefore, effective use of financial information reduces uncertainty and supports strategic and operational decision-making. Thank you for watching this video. If you have any questions, please feel free to contact us via email or WhatsApp at 0748 436 1688.